Joining me now is Kendrick Nguyen, the CEO and co-founder of startup investing platform Republic. Welcome to you.
Good to be here.
First of all, after We's debacle, do people still want to invest in these early stage companies? Or maybe it underscores why you have to.
They absolutely do. Much of a company's growth happens during as a private company. And now WeWork is just about going IPO. Imagine when you could have invested in WeWork back when it was $50 million in valuation or $100 million. Now the debate between $40 billion or $10 billion still makes it a very viable investment opportunity.
So there are companies like the T. Rowe Prices of the world that let people invest in startups who are just the regular old public. What makes you guys different?
The difference here is when a company is still, 20, 50, 100 people, and if you invest $100, your potential return can be 100x or even 1,000x. Of course, the risk of loss is very, very high. So it's high risk, high reward, very different in the public market.
But it sounds like the worst way to use a credit card, by the way. I mean, for something that's high risk, high reward, are you going to be exposed here to, I don't know if it's bad for business per se, it might be great for business, but to regulators cracking down on this?
We have a maximum beyond which people do have to invest using their bank account. So credit card is just for convenience. And we're talking about amounts below $100. So if you look at how everyone deploy 40, 50, 60 billion dollars into lottery tickets, we just believe that private investing got to be something that people consider when they make the investment and life-saving decisions.
No, listen, I'm not a big fan of the lotto, so it's a good analogy in terms of what people spend there. But everyone should know this used to be restricted, investing in these kinds of companies, to only accredited investors, and that was usually people with $1 million of net worth and certain income thresholds. But didn't regulation do away with all that? Is that why you're now able to offer this product?
It did change in 2016. Before that, generally, you got to be a millionaire to invest privately. Now, you got to go through a platform like ours. We're regulated by FINRA, by the SEC, and our due diligence process, we accept less than 2% of those who apply to raise.
Wow, why do you turn people away?
WeWork is one example. In addition to financial statement, balance sheet, you got to look at the team, making sure that they have the emotional maturity to build a company. It's a really hard thing to do. So we got to vet and make sure that, hey, here's a team that we at Republic believe that they can do what they claim they will.
Did you turn WeWork away from your platform?
We did not. WeWork was launched, some 8 years ago, I believe, and Republic is only 3 years old.
But you'd say to people now, they're trusting you to kind of separate the wheat from the chaff. That's interesting.
If I could go back in time, I definitely would have loved to invest in WeWork back when it was $100 million in valuation. And
I think a lot of people would. Ken, thanks very much.
Thank you for having me.
Good luck with the venture, and we'll be watching to see what the public does with it. Ken Nguyen is the CEO and co-founder of Republic.